ASML has been a really hot topic recently, in the semiconductor industry. So in this video, I'll be giving you guys a review of their latest earnings, their Q3 2024 earnings, yeah. So in this video, this is what you will be discovering. First, I will share with you the company news, what is currently happening, the financial results, and then we will go through the earnings call, and then I will reveal to you what other information that you guys need to know. And this is, I feel, is the most important part of this video. And then I will go through with the valuation with you, and I will give you a summary, on what's happening for the earnings for this quarter here. Yeah. So let's go through the company news. So as you all know, ASML has crashed, a total of 20%, which is a very huge drop recently, And why is it dropped? And it's very funny, because apparently, they accidentally released their earnings early, so it's kind of shocked the whole market. But of course, it's also being accompanied, by a very bad earnings, of course, and which we will be going through with you in this video, And let's go with the financial results. Now, ASML, of course, when they report here, they just told you, very basic numbers, and it doesn't really tell us anything. But, ASML reports 7.5 billion euros, not USD, euros total net sales with a net income of 2.1 billion. So, it's very basic numbers here, so we can't really tell how's their performance. But hey, don't worry, since you watch this video here, I'll give you a lot of value. So, I will show you direct, the whole financial performance. So, their revenue, like I said, is 7.5. If I'm not wrong, 7.5, right? 7.5 billion. So the real number is 7.467 billion. So in their previous quarter, if you compare, it's actually, a slight, accelerating in growth a little bit, by 11.9%. So, this is quarter on quarter. So you can't really see a good picture on this. But, if you look at it from the last 12 months revenue, it will be more smoother. So you can see from the previous quarter here, you can see there's some slight drop, and then accelerated a bit. So you can see the growth rate. This, if I'm not wrong, the blue line is the growth rate. Previous year, 2021 to 2022, is a lot of growth. Growing at 37%, 30%, which was really, really very high. But then recently, this 1 year it has been dropping. So that's why you can see why, since after July, the market doesn't like their results, and it has been continued to drop, for a total of 36%. And of course, quite recently, immediately plunged another 20%. So their gross profit margin has been quite healthy, to be honest, at maintaining at 50%. Then operating margin and net profit margin continues to be well around 30 and 27%. No issue with us. Then the balance sheet. Now, this company, the balance sheet is very solid. I would a lot of assets, a lot of cash. Then perhaps, some of you may be quite worried on their total liabilities, which is this orange bar here. Now, let me rephrase, just in case you all missed out. The blue color is the total assets. The total assets is quite high. Then the total cash is this amount here. And then the total liabilities is this one. Now, perhaps some of you, again, could be quite concerned, wow, the total liabilities could be quite high. Well, this is accounting issue, to be honest. Because if you took their total liabilities, the ones that contribute the most is actually from this unearned revenue. Total unearned revenue current. All right, which is this amount here. But of course, there are some periods they reveal this amount, some they never reveal this amount. So as you can see here, all right, as compared to the current liabilities, like you can see here, because currently the current liability is around 16 billion here. So a few percentage, of this unearned revenue. In case you don't understand what is unearned revenue means, that the customers, they paid ASML earlier. They paid an amount first. That means in order to use the machine, they have to pay first, and then they recognize it over a period of time. So by accounting, they have to park it under liabilities and then slowly move it to the asset side. So based on this, you can see this is 11 billion, and then the current liabilities is around 16. So I would say it's around 60 to 70% of these current liabilities should be from this unearned revenue here, because you can see the latest quarter they never revealed the information. So if we remove this, so by right, the total liability is quite lower than shown in this amount here. So no issues with their balance sheet on ASML. Very strong company and stable. So this is the financial results, but the gist of what we want to know now, their performance for this quarter actually comes from the earnings call. Mainly, a lot of you want to know why the share price plunged so, fiercely, for the past few days. And this is the one that I will review to you guys. Number one is because there's slower recovery on the mobile, PC, and automotive sector. Okay, so this is earnings call transcript by the CEO. Yeah, so you can see this what the CEO here he mentioned that there will be slower recovery. Okay, and it affects every single customer. I mean for their customer lah. So it thinks, of course, okay, our customer continues to confirm that when it comes to the mobile market, mobile PC, and also the automotive market, the recovery for this sector it's not what I think everyone had wished for lah. So apparently they are recovering, but at a much slower pace. Yeah. Okay. So this is the first point. And second point, and because of this, okay, in the business, they remain very cautious for 2025. This is the thing. Yeah. So you say demand expectation for next year. So how is it like? So it seems that, okay, I think you see yourself, as you mentioned, the recovery of mobile and PC tend to be weaker than expected initially. And then they use the word cautious here many times. So I think we use the word cautiousness a few times in the call. So when you become cautious, I think this means you are careful on the short term and also a bit on the midterm. So, when this kind of not so positive, outlook, by the management, so that's why part of the reason why, the market don't like it and the share price drops. Okay. And then another point here, good thing is ASML remain optimistic on AI, as a key driver for industry growth. Now, of course, the in between the short term here, you can see some of their customers, recovered much slower. But nonetheless, okay, because of AI, okay, because of this growth over here, yeah, they foresee that the whole industry as a whole, if you think in the long term, they can continue to grow for many more years to come. So what he said here is, with regards to market conditions, we continue to view AI as a key driver of the industry recovery, with potential upside. Okay, we see other segments recovering more slowly than anticipated. Okay, so other sectors, yes, recover slowly, but again, AI will be the key driver. Okay, will be the anchor to continue to pull the whole semiconductor to go up. So the recovery will extend well into 2025. So it seems, okay, in their opinion, okay, by 2025, semiconductor will recover, but this recovery will be much slower still and will extend until 2025. Okay, so we leading to customer cautiousness, okay, and some push-outs in their investments. It means they they lowered their investments on semiconductors. Okay, now one good news, of course, okay, like I said, they say in the short term and stuff, yeah, slower recovery and everything. But if you are willing to think a much longer term, okay, they are actually preparing already. Okay, demands by their customers. You see, this is very important, this passage shared by the CEO. So as we look out longer term, okay, consistently with what we have previously stated, the circular growth drivers in the semiconductor industry is still intact. It's still, it's still on the way, lah. Yeah, on the way, and then it's still growing. So AI, energy, all of these, right, will provide a very strong and very positive perspective to our industry and, of course, their business. Okay, and because of this, right, ASML has been preparing. Okay, we continue to prepare for a number of new fabs that are being built across the globe to address the future demand and the needs of the industry. Okay, meaning to say some of their customers, yes, there is a slowdown and stuff, but they are now currently building new, semiconductor fabs, the factories here, across the globe already. They are building that. So because these fabs here, when they build, they need ASML's machine on their factory, the fab factory there. So that's why they are preparing already for this, because if they can see future demand. This future demand can be seen from the new factories that their customers are building currently. Yeah. So those fabs are spread geographically, are strategic for our customers, and are scheduled to take our system. Okay, so we will therefore continue to build capacity in order to respond to the demand increase that we expect throughout the remainder of this decade. So they know already demand is there already. Demand is there in the future. It will happen because the customer are building the factory. But currently, right now, that they say in the short term, it's still a cyclical industry. Yeah. So some of the customers are still experience a much slower recovery. Yeah. Okay. Now, next, other information. Please pay special attention on this. Because I feel this is the main gist, all right, on what will tell us, okay, on the future performance of ASML. Yeah. Okay. Number one, another reason, why the market, punish ASML, okay, why the price dropped so much, okay, is because of this. Besides from the slower recovery, it's also because of the China sales. Okay, China sales, the management said it may drop already. Yeah. You see, for the past 2 years, if you can see the result just now, why 2021, 2022 or 2023, right? Okay. and up to closer to 2024, why, the revenue has been growing so fast. Now, this is the reason why they told us. It's because in the past 2 years, it's because they have been fulfilling the backlog from China. This is what's contribute to the revenue. Okay, so at that time, the previous years, why this backlog continue to be is because at that time they have a low order fill rate, means that the fulfillment, okay, of the orders has been quite low. So as a result, they continue to keep on having a backlog. So this backlog here built up for the past 2 years. Okay, and it's only just recently, okay, they are able to deliver on that backlog. It means to be able to fulfill on the orders. So that's why the China sales in 2023 and 2024 has been so high. So you can remember for the past 2023, 2024, why ASML has been growing so fast. You can see the share price why shot up, right? It's because the revenue is contributed from the China business a lot. And this is from the fulfillment of the backlog orders a lot. Okay, so but nonetheless, what they say is we expect a certain point in time for that to normalize. And not only that, for those of you who have been following news on the US and China tension, right? Okay, we all see there's a speculation around export controls, meaning to say there's some speculation or rumors, that US, may, how to say, control what things to export to China, especially on the semiconductor products. Okay, so, with that, everything combined, okay, the ASML indicated that we believe the China sales for the next year, all right, will go to around 20% of the expected sales. Now, let me tell you this, 20% is a very huge difference, very, very huge gap from their current percentage. Okay, so currently, keep on mentioning in their earnings, you can see China's sales percentage will be around 20%. Okay, eating less and less of backlog into China means their backlog is now getting lower and lower already, means they are fulfilling it. And after that, there will be no more new orders already, lesser already in the future, because they speculate export control restriction. So it's prudent to go back to this 20% for China. This one also same, normal percentage, 20% here. Okay, so you can see in this latest result, okay, is what? Q3 2024. The percentage is coming from China is around 47%. You can see from their slides, 47%. So it's a very huge gap from 47%. And then they say by next year, you see, we believe the China sales for next year, they foresee it will be only contribute around 20%. So you can see, the amount of revenue that, they may have slowed down by China. Because previously their growth is supported by China until 47% of the total revenue. Now they foresee drop to 20%. Okay, so let me summarize everything, okay, for you guys to understand. So backlog reduction, for the past 2 years, the company has been aiming on what? Reducing the backlog orders from China. Means currently they have been delivering the product and services that have previously delayed. And because of this, the sales for 2023 and 2024 is very, very high, because they were catching up on fulfilling these older orders. Okay, but currently we can see already the management told us that the backlog is clearing already. And the sales from China are expected to normalize or decrease because the company no longer has a large amount of accumulated orders to fulfill. Okay, so how's the impact for revenue on ASML? Okay, so this is my speculation. So it seems that, okay, we all know already, first thing, 2023 and 2024, okay, the revenue is very high, the growth is very high. It's because they were fulfilling the backlog from China. And now the backlog is being worked through. Future sales from China, it will be lower. Keep on saying they only expect to contribute 20%, causing a decrease in revenue from that region. Yeah, so and that's why the company is very cautious right now on the future sales, all right? And also the speculation because of export controls and stuff, which could limit their ability to sell to the Chinese market. Okay, so sales projection, of course, there will be significant drop. Okay, because they mentioned China sales represent 20%. So it will indicate a backlog will be once it clears, and then there's speculation on the export controls. So they expect a significant drop. Okay, now, so another point that in the earnings call here, of course, they never mention, but it has been going around in the news here, which I think could be accurate. Another extra slowdown of recovery. Do you remember just now when we mentioned, okay, the slowdown recovery from the mobile, PC, and automotive, okay, could be from Intel and Samsung. Okay, because you see, first thing is Intel, okay, has been cutting down expansion plans, particularly the delay, okay, of its fab until 2029 to 2030. Okay, and then Samsung Foundry has also had been delaying on building their factory also in the US. Yeah. So and then another news, they also say Intel, because of the postponement, which is this one, okay, they slow down the business. Samsung has also been performing very badly. Yeah. So Samsung at that time in September, if you all still remember, okay, if you've been following, yeah, they even issued an apology letter to investors for its recent technological underperformance. Now, why I say this could be the contribution, okay, on 2025's slower recovery. Okay, that not to say drop, but they are recovering by the slower rate, is because I already know, it has been quite well known that ASML's top customers comes from Intel, TSMC, and Samsung. As I show you here, okay, ASML's three largest customers: TSMC, Intel, and Samsung. With the combined annual sales, okay, before the China boom, of course, okay, the China backlog, okay, is around 70 to 80%. That's how concentrated the customer is. So Intel and Samsung have been slowing down, so it's no wonder ASML also give a very pessimistic outlook for 2025. Okay, all right. Okay, next, valuation. Okay, of course, before I go to valuation, now so far, if you guys enjoyed this content, if you feel that you have learned a lot, and hey, then just subscribe to our YouTube, because in our YouTube we always talk about the US, Singapore, and Malaysia stocks. All right. And of course, like for example, today we dissect the earnings reviews. If you enjoyed it, okay, then our channel is for you. Okay, so do continue to subscribe and feel free to look around in our YouTube channel because we have a lot of content there. And another reason for you guys to subscribe is because on our next video, we'll be sharing with you TSMC's latest results. Okay, which is the Q2 2024. And so continue to subscribe, okay, and click on the notification so that you don't miss out. All right. Okay, let's go to the valuation part. Now, on the valuation part, and let me tell you this, okay, apparently their price right now is quite reasonable, okay, because the price to sales ratio, if you can see from this red line here, because on average, we have been taking we take on the average for 2 to 3 years, right? Apparently, okay, currently as of today, the price to sales ratio is supposed to be around 10 times. 10 times, okay, and for the past year, the market has been quite optimistic on on ASML, and that's why they give them a very high multiple, much higher multiple, okay, until the highest peak here during the China business was booming, right? Okay, given around 17 times, 17.5 times. Then currently he has dropped back, okay, to 10 times already, and the price because of this, okay, our price right now is around 700. Okay, so it seems that currently right now the price is quite reasonable, right? Because it's already hit the average price to sales ratio of 10 times. And currently, if you see the blue color, the price to sales is 9.69 times. Okay, now let's go to the summary. Yeah. So first thing, we all know already there's slower recovery on the mobile PC on automotive sector. Okay. And AI will be the key driver for the industry's long-term growth. And of course, we also know that they are preparing for the future demand by their customers, because their customers are already building these factories, although delayed, but they are building, very much delayed for the next few years, but they are delaying. Okay. So they are preparing to meet this demand. Okay. Then currently, the previous high sales from China is driven by delivering on past orders that have been backlogged. That's why the revenue jump up. But right now, we can see there's slowdown already from China, and currently maybe also from Intel and Samsung. Yeah. So coupled with everything, now that the backlog is nearly cleared from China, coupled with the export concerns some more, there's a lot of uncertainty. That's why the company right now anticipates lower revenue sales and the normalization of revenue from China already. All right. So valuation currently right now is quite reasonable, but all I can tell you is 2025, the sales are quite uncertain. All right. So, guys, thanks for watching until here. So I hope you guys can get a lot of information from this so that you can make your own independent decision. Okay. So again, remember to subscribe. Okay. And we look forward to share TSMC's next results with you guys. Okay. See you. Bye-bye, guys.